Good morning and welcome to AROBS Transylvania Software Conference call for presenting the H1 2023 results, our first call since transferring to the main market of the Bucharest Stock Exchange. My name is Zuzanna Kurek and I am Investor Relations Manager at AROBS. I am joined in this call by Voicu Opran, CEO, President of the Board of Directors and founder of AROBS, Bogdan Ciungradi, CFO at AROBS, and Christian Prevenda, my colleague IR Officer at AROBS. Together we will present to you AROBS consolidated H1 2023 results as well as answer any of your questions. Before we begin, I would like to mention that this call is being recorded and the recording will be made available on our website later this week. As stated in the call invite, by joining this video conference, you automatically and implicitly consented to being recorded. If you do not consent to being recorded, please skip the call. In terms of organizational aspects, let me present to you first the setup of this call. Firstly, Voicu Opran will deliver opening remarks. We will then move to the financial results outline, where Bogdan Ciungradi will deliver a brief presentation. Lastly, we'll present the details of the development strategy of AROBS. During our presentation, feel free to type any of the questions you might have in the chat box and we will answer them during the Q&A. After the presentation, we'll start the Q&A session. We will answer the questions we received in chronological order. Please note that all participants are put on mute. If you want to ask a question, please type it in the chat window. Finally, I would like to mention that we might be making forward-looking statements today during this call regarding the future performance of AROBS Transylvania Software and that actual results may differ materially. We encourage you to review the disclaimer that you can see right now, which is included in our presentation. This disclaimer applies equally to all the statements made in today's call. I would like to now proceed to the first part of the call, and Voicu, you're welcome to share some of the key highlights from the first half of the year.
Hello everyone, great seeing you. I would like to highlight a little bit 2023. As you know, we report 90%, almost doubling the turnover, while a little bit reducing the profitability, and that has also some meanings. We'll see in the presentation more details about what contributed there and what was the plus and minuses. We increase, we had good organic and also the acquisition and greenfield, so we have all the three components. If you go back, I would like to underline a little bit what we did in the H1. We completed the acquisition of Future Workforce Global, which is a company presented in Germany and UK, especially in the area of robot process automation and artificial intelligence. That's part of our goal to continue and to grow further in an area that is very hot. Everyone, I guess, it's familiar with the UiPath story and the fact that Future Workforce is an implementator of UiPath in the main area. Plus, it's a diamond partner, so that means it's allowing to sell licenses all over the world. It's a big plus. Okay, we worked a lot on publication of IFRS in results in 2020, 21, and 22, and Bogdan will elaborate a little bit more. Has been a struggle, to be honest, a big step also on the IFRS format, but on the cost side, it requires at least two areas where we grew. Our internal team, the first, and the second one, the consultants plus the lawyers, for moving to the main stock, the piața principală, main market. Then we were able, based on the results that we had, to include the AROBS in the MSCI indexes, Morgan Stanley Capital, whatever, international indices. That's very, very good. That's a good sign, I guess, also for investors. We also announced that we completion of the buyback program, where the company acquired the stocks from the market in order to create reserves on the company. We also, I guess, which was not there, is we canceled some shares. That was an important movement, especially because we canceled the shares. That means everyone is, including me as a major shareholders, get 4.6% more from the company than used to be. So we and that we can elaborate a little bit more why we did that. But mostly, I would emphasize that the auditors and consultants recommended us, because of 1 year ended, to actually stop that program and change the shareholding structure. And then, of course, is the debut of the AROBS shares, which happened lately, in last week. And also we did research coverage for Wood and Bereka financials. We helped them in understanding their business, our business. We helped them also generate that coverage for the stock. We provide the segmentation between service and products. We also separate and you'll see in the presentation in the Bogdan, in the streaming, that we separate lines in organic growth, greenfield, and also acquisition. So I guess that's about all. We can move to the next slide, where we have the situation that you already have it. I guess it's in the report that we published. As you see, organic, there is 66% of the business is organic, M&A is 22%, and greenfield is 12%. That overall consists in AROBS. Those are the 3 engines that we are using. We increased the cifra de afaceri, the turnover, with 90% compared with the S1 last year. Of course, because of acquisition, some of the acquisitions, but also greenfield and organic. Talking about EBITDA, we are using for the time being EBITDA, normalized EBITDA, and that's because of the stock options plan that was offered by me to the company at the nominal value, but then in the results is it's a position of non-cash. To be honest, it's it's not affecting the company. It's only marginal affecting the company, but that is in the P&L. You'll see it at fully, because we are required by the auditors to report it as a market value. Okay, and in the M&A, you will also see the margin, the M&A margin, and also the greenfield. In the salaries and other contribution, you'll see a big increase, and mostly that's because of the workforce. We do work with people, as you know, and in the S1 we had salaries and other contribution that we pay, and it's split it between organic, M&A, and greenfield also. And also you'll see the other expenses. All of this increase. We need all of you as investors. You need to understand that everything is coming with the price. to almost double the company. It comes with a price. We didn't get to the point of yet, at least for the time being, to get everything under the same umbrella, and that's why you'll see also you saw an increase in the contribution. Plus, we need to maintain everything at the market because we are a big player, and we have also a big expectation for people, and so far is in kind of equilibrium, I guess. You'll see that situation. We can go maybe further, Susanna, and I will let Bogdan to speak a little bit of financial result for H1.
Good morning, everybody. We just published at the end of last week the results for the first half of the year 2023. I would like to mention that we use the statutory framework to report this, even though we prepared the IFRS for the prospectus for the transfer. And the third quarter will be again on the statutory framework. At the end of the year, we will start reporting fully IFRS. And from that moment on, every quarterly results will be reported under IFRS. As Voicu mentioned, the results for the first half of the year in terms of turnover are quite impressive. We grew by 90%. About 2/3 of the growth came from M&A and from Greenfield. M&A, it's generated by the companies acquired after the 30th of June 2022. So we have AROBS Development and Engineering, the former Enea Romania. We have the NordLogic Group. They both operate on the software services segment. Then we have Centru de Soft GPS, who is on the product side. AROBS Software Moldova, whose software services, AROBS Track Moldova, who's also on the product side, and AROBS Polska, who's on the services. And lately we have included in the starting with 1st of May, also the results of Future Workforce, which is it's a group of companies that it's on the software services, on the machine learning and RPA area. Also the organic business contributed to the turnover. They account for 66%, so for almost 2/3 of the business, having a 26% increase compared with last year. So the growth, it's not coming only from M&A and Greenfield, but also from the organic growth. What fueled the organic growth? It was generating, contracting new projects with the existing customer portfolio, and also extending our teams, which is not reflected only on the cost side, but also on the revenue side, by enlarging teams and being able to generate more significant projects. Integrated systems, which is our Greenfield, also had new projects in the public sector, but also in the private sector, and they successfully finalized a big project with the Romanian Customs, which was delivered by the end of Q1. Looking at sorry, if you can go back for a second. Looking also at the performance, we have the normalized EBITDA that we are looking at, which is EBITDA less the share option plan impact. As Voicu mentioned, this current share option plan, which is reflected in our P&L, it's coming from the shares acquired by the company at nominal value from Voicu before the listing on the IRO market. So their actual cost is significantly lower than what is in the P&L. The accounting standards require us to to reflect it at the market value. And also we have the normalized normalized profit, sorry, where we excluded the share option plan, but also the goodwill amortization in order to make the results comparable with previous period. In the statutory accounts, in the statutory accounting standards, the goodwill generated by the M&A activity, it's amortized. It's a different accounting treatment compared with IFRS, where you only recognize it in the balance sheet and you annually make the impairment test to see if the value if the goodwill is reflected at fair value or not. Looking at the segment contributions, we have the software services. We had a significant increase of the business, both from M&A and also organic. The growth on this segment was 83% compared with the first half of 2022, and they account for 74% of our total turnover. Software products also delivered a 21% growth, and they account for 14% of the turnover. And the last pillar for our development, the integrated system, it accounts for 12% of the group turnover. Moving to the operating cost side, yes, the personnel expense, the staff cost in our business, it's always the biggest one, because we are delivering software services with teams, with people. The increase in the employee cost, it has a few explanations. First of all, we have an increase in the number of people. So we grew from almost 650 people to over 1,200, partially from organic growth. So on the organic activity, hiring more people and bringing internally some skills that in the past we used to subcontract to third parties, but also it's coming from the M&A activity. About 1/3 of the cost it's generated by the new companies we brought to our group. Also, we had an increase in the third-party services expenses, and this one it's mainly generated by the companies brought through M&A. So almost 18 million out of the 20 million growth, it's coming from the companies we brought it within our group. Also, as the activity of system integration growing and accounting for 12% of our turnover, also we have on the other side the increase in the good expenses. So the biggest part of that increase is coming from the cost of the systems we delivered to the public sector. Then we had other expenses, and on the other expenses, part of the growth on that cost side, it's because we wanted to align our accounting policies as much as possible to the IFRS. So what we've done this year at the end of the first half, we accounted for the untaken holiday, which last year we only reflected at the end of the year. And this was bringing a difference between the periods of around 3.2 million RON. And also we accounted for the provisions for bad debt. And again, last year we only have done this exercise at the end of the year. The net impact between the periods, it's around 2.3 million RON. Another effect, as I mentioned earlier when I was talking about normalizing the net profit, is coming from the goodwill. buying more companies is also bringing the cost of amortizing the goodwill generated through those acquisitions.
Yeah. Okay, we can go to normalize EBITDA, I guess, further.
Yeah. Going to the normalized EBITDA, we can see that the significant part it's brought about 72%. Sorry, about 73%. It's brought by the organic business in terms of contribution to the normalized EBITDA, but a significant share, also 26%. It's brought by the M&A activity. So we had the contribution of 22%, if I'm correct, on the turnover, and the contribution of 26% in normalized EBITDA. The greenfield, which is system integrated in terms of profitability and EBITDA, it only brings 1%. Why? Because this is a significantly lower margin business. It's a single-digit business, but for us, it's a strategic pillar because it allows us to go and make offers for projects funded from PNRR.
And there was a question. I guess we can respond on the spot. What was good included, and mostly the servers and licenses for the custom project. As we mentioned, as Bogdan mentioned, it's a single-digit margin, and so far we are a little bit far from the food chain, as we said. We need a little bit more work on those projects to get to actually software development and do more software implementation that usually has a bigger margin. So I guess we can continue with the others, and we'll respond later on with the questions.
Okay, looking at our performance against the budget we approved, we see that the revenues are about 8% higher, and the main reason it's the companies that entered the group in the first half of the year, because when we built the budget, we only took into account the companies that were already within AROBS group. No additions were budgeted because of the uncertainties of the transactions. They also contribute partially to the expense side, and we came to a normalized EBITDA, which was about 3% lower than what we budgeted. So we were pretty close at the budget we proposed for this year in terms of performance for the first half.
Yes, talking about development strategy, I will go further. So you see on the right side companies and what we did, software service company that are under our umbrella, with the remarks that AROBS Polska has significant components on hardware, so they do develop hardware and solution for hardware, plus also the software. For products, for software product division, you will see we have several verticals, and here I mention, as you know, Track GPS, the monitoring solution, tracking, and Optimal and Monepos. Monepos is a little bit behind the market, to be honest. We are working there with getting to the speed. We'll see. Then we have AROBS digital school textbook digitalization. We didn't so far. We do not work with the specific organization with the Minister of Education, but we do work with a company that has a contract with them.
Publishing house.
Publishing house. Editura Ramis. You will see on every book, maybe if you have kids, you know, in the school, you'll see at the end of the many of the manuals, you know, AROBS presented there as a digital platform. And the last one is the RateWiz. And RateWiz, which is also is a solution implemented in Norway. Pretty good solution, but unable to scale it. There are some others, UCMS, that you are familiar with. We did acquisition about 4 years ago of that company. And implementing payroll and people management for the Romanian market for now.
It's top 3 solution.
Yes, in the top 3 solution in the market. Then we also have SaaS, which is also a fleet management solution right now in the process of integration. AROBS et al, because et al is going to affect us everywhere. Already had a lot of experience in Hungary and in some other countries where you know, we need to pay, or the transport company need to pay et al solution. I would mention CDS, Centru de Software, which is a CRM company, and also Soft Manager, CDS, which is which is a track GPS company. We did acquisition in the first half of this year.
End of last year.
And the Soft Manager, which is also a CRM company, and complement a lot with Optimal. Optimal already celebrated 20th anniversary since the presence in the Romanian market with more than 300 customers, mostly distribution companies that are fast-moving consumer goods. So that's on that side. On us, we are also look for why we have different business lines, especially because it's like staying on 2 legs, you know, maybe sometimes 4 is better, you know. That's allowing us to take over all the increase or decrease in the market. Plus we have resource optimization. That's something that we need to work more on it, to be honest, because product people are not usually similar to the service people. The one in the IT knows. And I would underline also innovation catalyst, because usually the service product initiate you know, our interest in developing products for a certain industry. And here I will give the example with RateWiz, the channel management solution that started as a service initially, and then we moved to a full product. That's about all. For you see many balls in the air, to be honest. We have of course division managers that are following pretty well. For the past, we raised 15 million for acquisition, and you see that fuel actually the M&A process. We did 9 M&A. We are working on integration and to find also complementarity in some of the areas. But mostly I would add complementing automotive with medical, aerospace and marine. That was one of the elements that we succeed with the Enea acquisition, with also AROBS now has more competence beside automotive to medical, aerospace and marine. About 2024 to 2026, we plan about 55 million to raise for the next period. with two pillars, I would say, 40 million cash component for acquisition and 15 million to be paid in AROBS shares. And we tried that because we target a deal structure of 75 cash and 25 shares component for any acquisition. And also we estimate about 75 million shares to be paid to companies that join AROBS group and being an important motivation for entrepreneurs who join AROBS group.
To generate growth further.
To generate growth further, yes. So, of course, you'll see in the M&A transaction, it's really important to see the investment phase initially, then integration, diversification, exposure, synergies, economy of scales, and you see some of components are already checked. Growth, revenue growth, is there. We are working on integration cost. We are working on economy of scale because it's important once you have access to a big group like us with more than 1,200 people. For partner, we become a sizable, and especially for the targets, we can grow their customer base to a different level. And we saw that in the last year with the Berg, Berg customers, or with Enea customers willing to give us more work because we are bigger, and that's the economy of scale. On the synergy, we are working with to integrate different people here and there, from the technical point to the sales, and also some. Let's stick with those sales and technical people. Also marketing, I guess that was the third one, with the synergy that will add more value. On the integration cost, as I said, we are working. We didn't get to the point where we wanted, to be honest, but we'll work harder and add. Also, we have right now, as we speak, we have integration manager in place in the company in order to help us on the process and implement better and faster the integration. Diversification I already covered, I guess, and expansion. For example, with the future workforce, the good example is we expand to the UK market. And also we have presence with different exhibition and events, mostly marketing events, where we can address more customers, not only in the RPA area, but also in some other areas. So I guess that's a good element. What I guess is for us, also talent acquisition, there is important because we grew also the talent base. Also long-term focus and financials are, I guess, important in the matters, but we can elaborate a little bit further. Post M&A, I guess it's important to see what we follow. We do have optimization of and business strategy. The time frame in many companies that we covered is between 1 to 2 years, but it depends also on the I would say level of autonomy that you want to give to the acquired company. So far, we let them a little bit doing their work as they were, and but we evaluate between 1 to 2 years to complete the acquisition. I would go further. I guess if Bogdan want to add a little bit on those.
On the M&A side, there are two aspects why we don't do the integration on the spot. One of them is that in some transactions we agreed with the entrepreneur, with the seller, an earnout scheme which is for 1 to 2 years. So they are still active in the business. So we have to leave them a degree of independence in order to deliver, to continue deliver their promises. However, what we already did is that we tried to integrate the back office to put the same ERP all over the place, same HR modules, and to have start having standardized data and being able to consolidate the results and see their independent results on the same format as for the other companies within the group.
Great. Thank you very much. This concludes our formal standard presentation, and now we will proceed to the second part of the call, which is the Q&A. In the firstly, we would like to answer some of the questions we received via email. In the meantime, I also invite you, should you have any questions, please type them in the chat box. Regarding the questions we so far received, I will read all of them out loud, and then Voico and Bogdan will address them one by one. So the first question is, please detail the increase of commercial receivables from 68 to 102 million lei.
The increase in receivables is not unusual. It has also I mean, part of it is coming from the M&A, so the new companies that we brought within the group also contribute to the increase in the receivables, but also it's a cyclical thing. So across the year we may see increase in receivables, but towards the end of the year, all our customers are paying any overdues if this is the case. So at the end of the year, when we look, we only have rare cases where we have to make partial or full provision for a certain receivables.
There was also the second question about the increase in the provisions of 19 million lei, but you've answered that already during the slide. So I'll move to the next one. Please detail the 4.5 million lei work in progress revenue.
This is a normal thing. The work in progress, according to, if you build a software product, and this is what we do, and we are now working on a new version of our track GPS solution, the fleet management solution. You capitalize the cost for the software development, but according to the Romanian standards, you put them as a revenue from as a work in progress, not decreasing the cost side. This is one thing. And secondly, we have some projects which are fixed price, and they have like an advance payment, and then at the end of the project, when you get the acceptance, you have the final invoice. However, we recognize the cost as it incurs, as long as we see that there is no potential loss at the end of the project, but we don't recognize the gross margin. The gross margin, it's recognized only when we finalize the project and we have the final acceptance.
And here I would like to add a little bit the strategic side for the Track GPS and for the other products, especially where we capitalize the goods development. It is mandatory for us, especially as we integrate new companies or even old companies like SaaS or CDS into the group. We need to have a strong and reliable platform that everyone can use it. From our experience, it's of course ongoing project because we need to adapt different features with each integration. So integrating a product, it's a little bit different than integrating a service, because you need to integrate the platforms from one player to the others. And our goal is to have the most reliable, secure, and also the developed platform in Track GPS in order to be able to integrate easy the applications and the targets.
Now we move to a question related to the top line and bottom line evolution. The turnover increased substantially, but the net profit did not. What is the explanation?
I think we covered it in the explanations for each expense line, why it grew or why it varied from one period to another.
Yes, I agree. I think best is to come back to the presentation. And the last question from the same set: in how much time do you estimate you will fully integrate the newly acquired companies?
There is also the aspect of deferred pay, and there is bonuses that we pay to the shareholders. We earn out. And we usually prefer to keep them as long as possible and link their payment with the objectives. So we set ambitious objectives for all the acquisitions, and as we mentioned already, it takes some time. We learned from the acquisition, from the past acquisition. I guess the smoothest one was with the AROBS Moldavia and Track GPS Moldavia, because there we already had in place the system from the past, and also the procedures and the people are all aligned with the company structure. So far it depends on the level of autonomy of that business entity, the earnout, and also with the level of integration. So those are the key aspects. We are working on that, and we'll keep you posted about the process.
Great. And now we move to the questions from the chat. Is there any indication of a decrease in market for IT services within the market?
Well, I would say, I would rather say there is a flat, especially because of our area of expertise are in two verticals that are growing, but they are growing very low, but definitely they're not increasing. So we are not in, of course, as you know, crypto. We are not in the blockchain so much. I guess we're only one project out of maybe 50 or 60 projects is in blockchain, but also we are not in the e-commerce. Those are the areas where you see significant shrinking in the budget, I would say. So I guess it's the decrease in demand. We see actually at least stable, but with the new customers that are joining, we can compensate, and we work further with the customer to see and to forecast for the next year.
Great. The next question: what is your perspective on the current labor market in terms of finding suitable employees that meet your requirements, as well as the recent salary expectations?
Actually, in the labor market, we see a little bit of more resources cooling down, everything cooling down compared with last year, let's say similar time. Also in the salary expectation, I don't know what to say. You know, you need to pay for specialists sometimes ridiculous amount of money. On the other side, we see also people willing to subcontract more than being an employee in the company. So we try to balance together with all these elements. So yeah, with current labor market is I would say cooling down, and we'll see how this will evolve for the next year.
What are your expectations for the near future? Do you anticipate any improvements in margins?
That's a tough question, you know, especially when you grow 100% a year. That's what we estimate, or we follow the budget. We try to grow mostly, and not focusing so much on the margin. Of course, Bogdan here is here, so we do work on the margin, but on the other side is it's important for us to deliver the growth that we promise. Where's the limit? I guess, I don't know, if the next 10%, you know, might generate a bigger saving in the margin. I'm not sure. We are evaluating every time where we see and how we can improve the margin, but it's definitely not our goal for now.
And the last question from the set: what is your targeted EBITDA margin in the long term?
I guess we already, the one that is specified in the budget, that's the one that we target, and is also aligned kind of with what we did. But as I mentioned, we are preparing ourselves for growth and for optimizing the process and the system within the company.
Great. We move to a set of questions related to stock option plan and share capital increase. The first question: future stock option plan will use stocks from repurchase or capital increase, correct? So in the next years, can we expect similar expenses related to SOP than in 2023?
I guess we stopped the stock repurchasing at the end of Q1 or Q2.
Q2.
And the first month of Q2. Yes, that's our goal, to enter in the market when it's needed, in order to continue repurchasing, in order to use that as a key element for us to increase people morale, involvement, and also to provide that advantage to them.
Is the entire impact for 2023 for SOP already included in the P&L, or can we expect more expenses related to this item in the next quarters?
The full impact for 2023 is reflected in the budget. So we don't expect additional cost related to SOP compared with the budget. But as we account it on a monthly basis, so we don't put in the P&L if we have let's say in April we launched the third SOP program. That doesn't mean that in April we put the full impact in the P&L. We recognize it on a monthly basis throughout the period of the SOP. If it's 12 months or 24 months, then we put an equal amount each and every month until the end of the program. So we will see expenses also in the second part of the year, but they shouldn't exceed what we budgeted.
Okay, and the last question: why do you need a capital increase? Is there some large M&A in the works that would require it? From what I see, the financial position is comfortable, and I think investors first would welcome a return to the higher profit margins of the past before getting diluted for new M&A transactions if there is nothing significant in the pipeline.
So why do we need a capital increase? We were asked by some strategic potential investors, you know, why not maxing out, you know, the loans from the banks, or use, you know, bonds in order to finance those types of transactions. Our goal is to expand the company and get it to 1 billion company capital. What's the term? capitalizare.
Market capitalization.
Market capitalization. And for this, we need to grow fast and to prepare ourselves, because sometimes the transaction might take longer, and being a listed company usually requires different approval and maybe Consiliul Concurenței. There are different approval that need to be obtained. So our goal is to continue that M&A process and not to become, for now at least, a dividend-paying company. So higher profit margin, it's usually related to the profile of investors. If well, we are not hydro, as we said, where everything depends on the quality of the rain. You know, to be honest, in order to increase the profitability, we are more a growing company, and for us it's important to grow and then capitalize during the road all the advantages. And yes, there are transactions in the pipelines that are important, and for us it's strategic to expand our position in the area and go further to geographies where we have interest.
We have two more questions. The first one is, a big part of the added value brought by sales and company development was directed to the stimulation of the employees' salaries and benefits, while the profit stagnated. Most probably it was the assumed management strategy. The reduced profitability made this M&A campaign to be seen with critical eyes by some investors. When do you estimate that these financial efforts focused on the employees will be seen also in the increase in the company's profit?
I'm not following you. I was trying to find where's the question, to be honest.
It was sent just to me. Sorry, it was in
Okay.
Romanian. I just translated it.
Oh, okay. So, well, as I mentioned, I guess previously, we are a growing company. It was actually important for us to grow and to capitalize the size. And for us, size is important. So companies with 1,200 people in the Romanian market, there are few, I guess, with operation here. What I guess it is important to capitalize is the ability of scaling. Scaling is important, and get to more sizable project and more important project. So scaling, also the size of the project. So we evaluate internally, and we'll provide maybe later, you know, number of projects over 1 million euro, because that's important as a size to know. And also what we try is to create the stickiness to the customer, because stickiness is really important in order not for them not to replace, you know, from one day to another. So as much as you are, as big as you are, it's difficult to be replaced by other maybe players.
And we have two last questions from our analyst from Wood & Company. The first one is, by what point will you have extracted synergies from recent, meaning from the last 12 months, deals? And here I mean a return to the targeted EBITDA margin. Will this be visible already in mid-2024?
There should be visible by that time. As we mentioned earlier, we see a process between 1 to 2 years. So yes, mid next year we should have the full benefit of integrating the companies we acquired.
And the last question: what is the regional scope of your M&A search, primarily in Romania or to a greater extent abroad?
Well, Romania, it's our market, but we for the products, but mostly for M&A, we want to go abroad. And what we value is the markets where we have presence, because so far, being in Romania, we were able to sell outside, mostly DACH countries, Germany, Switzerland and Austria, that's one, but also US and UK. So regional scope of the M&A coming back is mostly to add presence and to have a sizable company in Eastern Europe and Eastern and Central Europe.
Thank you. We got 2 more questions. You did mention you wanted an integrated platform for the GPS tracking product. Does that mean you intend to build a single product to be sold by all the companies having similar products?
That's a little bit more on the operational side, I guess. But at the end, yes, that's to have a backbone, a single backbone for all the companies with the similar products, and have local flavors, specifically based on the analysis that we are doing on those specifically advantage on the similar products. So backbone, yes, there are different flavors on how it looks and feels, so interfaces and actually the result.
Thank you. And we received also another question that was sent directly. My kind request is if you have any other questions, please type them for everybody to see on the group. And the question is, what's your position on the market share, competitors, advantages? I think this is a very complex question given the size of AROBS, but I will let Voicu take it over.
Yes, so I guess what's the position in the market? So actually we have presence in multiple verticals. So in the product, at least we have at least 6 or 7 products. And for each one, there is a differentiation and it can be addressed one by one. On the other side, being a public company, of course, our competition has access to all this data. We already have the impression that we reveal more than enough, to them. They are, but in the service area where I'm not seeing such a big competition, especially in Romania, because we work for international customer, I would say our position is that we create stickiness, one, with the customer. So they are relying on us and they work multiple years with us. I guess the longest cooperation is more than 15 years. We act like an R&D center for them in Romania. And the third is the advantage is the people, because we try to incentivize them to work with the stock options plan and to work directly with our people and to deliver the last mile to the customer. So mostly, I guess there are advantages but those are advantage compared to the global market. Unfortunately, the size is not one of our advantage. If you compare ourselves with big consultancy group, like, I don't know, doesn't make sense to mention, but we are small, but we are a niche player and a really important one. And the last question, and we need to conclude, I guess, as Susanna mentioned, from a video, generative AI will impact the service division. I'm seeing generative AI mostly as an add-on to the people productivity and increase. In the service division, especially, I would say most of our work, more than half, is done through hardware. So hardware is definitely difficult to integrate with the generative AI. So I'm not seeing for now any impact. I'm not saying that it's not going to hit. Maybe later, but maybe later than sooner. But what I see, it's an increase in the productivity of people and what they deliver to the customer.
Thank you so much. This concludes our very first call since the transfer to the main market of the Bucharest Stock Exchange. We thank you all for joining us. Should you have any questions, as usual, we are available at the investor relations address. And the next results, of course, are going to be the Q3 results that we'll publish in November. As mentioned by Bogdan, these are also going to be results published according to Romanian accounting standards, I believe, for the last time. Thank you very much, and we look forward to hearing you in the next quarter.
Thank you very much.
Thank you.